There is a payment of roughly $1,915 sitting, unclaimed at the IRS right now, and for most seniors over 65, collecting it requires nothing more than filing or correcting one tax return. This is not a stimulus check. There's no new law you need to wait for. It's money the tax code already says is yours, but the IRS will never send it to you unless you ask. Here's what makes this feel like a stimulus. It arrives as a single lump sum deposit. You didn't budget for it. You didn't expect it. And when it lands in your bank account, it looks and feels exactly like one of those payments the government sent during the pandemic, except this one is real. It's available right now, and it's bigger than most people realize. Stay with me, because I'm going to show you where this money comes from, the 3 tax benefits that add up to it, and the single form that pulls it all back, plus a deadline that permanently locks out anyone who waits too long. And one of these 3 benefits is brand new. It was just created, and most tax software didn't flag it automatically when people filed earlier this year. That means millions of seniors already filed their 2025 return and left this money on the table. I'll show you exactly what it is and how to go back and claim it. Where the $1,915 comes from. Let me break this down into the 3 specific tax benefits that stack together, because once you see the math, you will understand why this amount is not just possible, but common for qualifying seniors. The first benefit is the one most people missed. The second has existed for years, and almost nobody claims it. And the third is one the IRS will actually calculate for you if you simply check a box. Combined, these 3 create a refund of roughly $1,900, and for married couples where both spouses qualify, the number can double. Let me start with the biggest piece, the brand new one that most seniors filed without. Benefit 1. The new $6,000 senior deduction. This is the piece I promised, the one that was just created and caught millions of filers off guard. Starting with the 2025 tax year, a brand new provision gives every American aged 65 and older an additional $6,000 deduction. For married couples where both spouses are 65 or older, that doubles to $12,000. The IRS confirmed this deduction in February of 2026 and published guidance on how to claim it. This is not the regular standard deduction. This is not the existing additional standard deduction for being over 65. This is a third, entirely new deduction that stacks on top of both. It applies whether you take the standard deduction or itemize. The full amount is available to single filers with modified adjusted gross income under $75,000 and married couples filing jointly under $150,000. Here's the math that creates the first piece of your payment. A $6,000 deduction at a common senior tax bracket of 22% saves you $1,320 in federal tax. If you already filed your 2025 return and your tax software didn't include this deduction, which happened to millions of filers, that $1,320 is sitting at the IRS right now, waiting for you to amend. Now here's benefit number 2, the one that's been on the books for years and almost nobody claims. Benefit 2, the additional standard deduction for age. This one is separate from the new deduction, and it has existed for a long time. But it gets missed far more often than it should, especially by seniors who file their own taxes. If you're 65 or older and you take the standard deduction, you're entitled to an extra $2,000 on top of the regular amount for single filers, or $1,650 per qualifying spouse for married couples filing jointly. It's automatic, but only if you check the correct box on your return indicating that you're 65 or older. If you missed it, or if your tax preparer didn't apply it, that's an additional $440 in tax savings at the 22% bracket. It sounds small on its own, but watch what happens when we stack it. $1,320 from Benefit 1, plus $440 from Benefit 2. We're already at $1,760. And now Benefit 3, the one the IRS will calculate for you, if you just check a box. This is the piece that pushes the total past $1,900. Benefit 3, the credit for the elderly or the disabled. This federal tax credit has been part of the tax code for decades, and the number of eligible seniors who actually claim it is astonishingly low. Here's why it matters. Unlike a deduction, which lowers your taxable income, credit lowers your actual tax bill dollar for dollar. Even a small credit has outsized impact. You qualify if you're 65 or older, and your income falls below certain limits. You claim it by attaching Schedule R to your tax return. And here's the detail that surprises everyone. The IRS will actually calculate this credit for you if you ask. You check a box in Part 1 of Schedule R, fill in your income in Part 2, and write CFE on the designated line. The IRS does the rest. For qualifying seniors, this credit can reduce your tax bill by roughly $155 or more, depending on your situation. That pushes the three-benefit stack to approximately $1,915. $1,320 plus $440 plus $155, $1,915, and every dollar of it is money the tax code says is yours. So how do you actually collect it? There's one form, and it reaches back 3 years. But there's a deadline you need to understand first. The one form that pulls it back. The form is called Form 1040X, the amended U.S. Individual Income Tax Return. This is the tool the IRS provides when you've already filed a return, but left money on the table. You have 3 years from the date you filed the original return to go back and correct it. That means right now, in 2026, you can still amend your returns for 2023, 2024, and 2025. If the new senior deduction, the additional standard deduction, or the elderly credit was missing from any of those returns, the 1040X is how you recover the money. The form has 3 columns. Column A shows what you originally reported. Column B shows the change. Column C shows the corrected amount. You fill in only the lines that changed. Attach your explanation and any supporting documents, and submit it electronically for recent tax years. Processing typically takes 8 to 12 weeks. And when the IRS approves it, the refund shows up as a direct deposit, a single lump sum payment that lands in your bank account exactly the way a stimulus check did. That's why this feels like found money. Because for most people, it is. One more path to a payment most seniors miss. Before we wrap up, there's one more source of unclaimed money that's completely separate from these 3 tax benefits. During the pandemic, the IRS sent 3 rounds of stimulus payments. The third round was $1,400 per person. If you didn't receive it, because you didn't file a 2021 tax return or because your information wasn't on file, the IRS automatically sent payments to approximately 1 million people in late 2024 and early 2025. But if you still haven't received yours, You may be able to claim it by filing a 2021 tax return and claiming the recovery rebate credit. The window to file that return may still be open, but it's closing. If you believe you missed a stimulus payment, check your IRS online account at irs.gov to see what was sent and what wasn't. Combined with the three-benefit stack, a senior who missed both the new deduction and an unclaimed stimulus could be looking at well over $3,000 in a single refund. Your action plan. Here's exactly what to do. 1. Pull out your 2025 tax return. Look for the enhanced senior deduction. If it's not there, and you're 65 or older with income under the phase-out limits, you left money behind. 2. Check whether the additional standard deduction for age was applied. Look at your standard deduction amount and compare it against the published figure for your filing status plus the over 65 add-on. 3. Check whether Schedule R is attached. If not, and you're 65 or older with qualifying income, the elderly credit was never claimed. 4. For any year where a benefit is missing, file Form 1040X. You can file electronically for recent years. The IRS refund typically arrives in 8 to 12 weeks. 5. Check your IRS online account for any unclaimed stimulus payments from 2021. Here's the bottom line. This isn't a government program you need to apply for. It's not a special benefit reserved for a small group. It's money the tax code already says belongs to you, from a brand new deduction most tax software missed, credit almost nobody claims, and a standard deduction that gets overlooked every year. $1,915. One form, one amendment, one deposit. The money is real, the path is clear, and the only thing standing between you and that refund is knowing it exists and filing the paperwork. So check your return today. And if you have a parent, a spouse, or a friend over 65 who files their own taxes, send this to them, because the people missing this payment are missing it for one reason only. Nobody told them. Now someone has. Note, this is general information, not tax advice. Actual refund amounts depend on your individual tax situation, bracket, and filing status. Consult a qualified tax professional or use the IRS Free File program before amending.